Morning, everybody. 8:11 a.m. It is October 2nd. Hope everybody had a good weekend. Friday was very, very interesting. And the quarter and the month. Some crazy games going. I had some longs after a pullback in the morning. Did all right, but wacky price action. Really wacky. Really wacky. Thought it was going to keep going, but then the SPY was so mixed. So, or ES was mixed. The sectors were mixed, and then it just tanked. Right. So this is definitely that was definitely some weirdness at the end of the quarter and the month. We went up earlier because the government shutdown was averted, and now we're pretty much towards the lows of Friday. So that's where we're at now. So without further ado, welcome to my channel. My name is Steven Gonzalez. Use market profile and volume profile to find structure in the market along with supply and demand levels, gamma exposure levels, and the most traded price of the rolling month, week, year. Okay, if that's keeps us on the right side of the trade, right? Or sometimes no trade at all. So that's what I like to use. All right, it keeps me on the right side. That price action can be very, very, very hard to look at and just go, oh, I'm just gonna sit here. But that's what structure kind of does. All right. Excuse me. Sorry about that. Usually shut my phone off. All right. So subscribe, set an alert if you can. That would mean a lot. Always can give me a thumbs up. That would mean a lot as well. Help my channel out. As well as you can follow me on X at Gonzo719. Now we can get right into this futures watch list and see what we have going on here. We have Bitcoin. Bitcoin catching a bid today, up 5.5%, or 28,605. Okay, VIX elevated still, 18 VIX, so 4.7, 4.85 now. ETH, Ether's up 3.94. The dollar now is above that 15.88 level, back above it. Crude just came out with it was getting more supply than needed, but still catching a bid. Very interesting. Nasdaq's flat. 10-year yield will be higher. The 30-year bonds are being sold. ES down 0.17. Russell down 0.17. Dow's down 0.22. Bonds down again. 30-year bonds being sold 0.63, down 0.63. Gold down 0.72 with the dollar rising. Silver, that volatile metal, is down 2.34%. Okay, that's what's going on there. All right, I already talked about the government shutdown being avoided for right now. All right, let's get into stocks I like to day trade and look at who's the leader here, up 5.22%. Coin. Now, Coin got some news. They got a license in Singapore, and Bitcoin's getting love. So that's double the win for a Coin. And Rosita's little play there. I think she's long some calls there. Nvidia. Nvidia is up 1.17%. Goldman Sachs put it on its conviction list with an upgrade. Okay, that is getting love. Followed by Meta. All right, but let's go to laggards because there's not a lot of them. JP Morgan's flat. Amazon is down slightly. Netflix is kind of flat. Google's the only one getting a little weakness, 0.35. All right. Let's see here. Talked about coin. All right. Let's move on. Top sector stocks. Roblox is not. There's not really leaders here at all. 0.03, 0.02. Let's go to the laggards. We got Morgan Stanley. We got McDonald's. We got Salesforce. Salesforce actually got taken off the conviction list for Goldman Sachs with a downgrade. So they're down 0.56 from that list. Okay, moving on to top sectors. Now, that's not much of a leader. Energy's up 0.1. Okay, followed by semis. And then losers here, laggards. We have financials, utilities. Utilities has been beaten down to a key level. All right, actually interested in me in maybe taking a little more stab in NEE. But again, I'm not a financial advisor. I'm just don't follow my advice. I'm just looking at that because it's at a very key level, followed by basic materials. Okay, weakest stock, weakest index right now pre-market is the Dow and the Russell. Okay, all right. Actually, it's the SPY, Russell, and Dow are kind of all down the same. Q's is flat. Okay. What else we have going on here? So we can get in some news. A little bit of news, a little bit of news here. China had a holiday. What else happened here? Well, we had that. Um, I'm sorry. We had the stopgap. So the Senate aims to vote on House stopgap bill Saturday. So that that happened. So we're not in a market down. We're not in a shutdown right now. It looks like on Friday, what happened was Federal Reserve Bank of New York's president declared that the U.S. central bank should maintain high interest rates for some time. A recovery in U.S. stocks and treasuries fizzled. That's kind of what happened on Friday. Um, I thought there was something else I wanted to talk about. I guess not. Let's look at the economic calendar for this week. Um, Today, so today at 10 a.m., you have ISM manufacturing and ISM manufacturing employment. So don't enter any trades at 10 a.m. Okay, we have Powell speaking today at 11 a.m. Powell speaking at 11 a.m. Okay, so I'm not sure what the market will do pre to that time. I'm sure there'll be some movement, but then I'm sure people are going to be listening to that speech. Then you got a lot of Fed speak. Fed Harker, Fed Barr, Fed Williams, all during the market open, and then Fed Mester after the market close. Tomorrow's Fed Bostic, and you have Jolts. Wednesday, we have, let's see here, S&P Global Composite, ISM Services. Let's see here, Fed Schmid speech, Fed Bowman speech. Thursday, jobless claims. Then you got Mester, Barkin, Daily, Fed Bar. And then Friday is NFP and unemployment in Fed Waller. That's what we have on tap. Um, let's look at what's going on here. Quarter four. Let's see here what I wanted to show. What's driving this market? Yeah, nothing much here. That's probably about it as far as news, because I'd like to just get into the daily charts. I did some analyzation this weekend, so let's get right into that. Give me one sec while I pull that up for you guys. All right, let's get right into these charts here. All right, this is the SPX, the cash market. Always look at that because that doesn't roll over. You don't have to worry about that. Um, so let's look at what I wrote here because I have a lot of notes from the weekend, and I'll just briefly go over what I'm seeing here. So basically, in the SPX, we came. Just look at this level here, 443.38. Okay, if you look at it, that was last week's high. Okay, that was last week's high, and it was also the low of August. So we couldn't get back into that, right? We tried and we failed. We went right back into the middle of Thursday's range. Okay, so there's a trend line here, secondary trend line, which lines up right here. So 4,038 in the SPX. You need to break this trend, hold this level to possibly start to move back up. That's really what I look at. Then below you have 41.99, which is the rising 200-day moving average. I could see if we do get farther distance and we break this trend line, probably make our way down to 4,200. That's what I see as far as SPX. Just move on to the SPY. All right, let's look at the SPY together. So SPY and SPX are going to look the same. Okay, same. The difference here is the key levels 433, pretty much 433, 43.38, like in the SPX, right? So 433, this level here, and this trend line needs to be break for the SPY, right? You need to break it, hold it, maybe a swing low here to maybe get into that rally, that seasonality rally. Seasonality has really been playing out so far in the market. September weak, October is usually somewhat weak, and then can start to rally. Okay, that's what a rally last year. Okay, it doesn't mean it has to happen, just means that's more probability what happens. Okay, so you can see we have a gap. Okay, so if I go to this chart here, this is the gap. All gaps are usually filled. Okay, so we need to work our way up to 433, fill this gap, and see if we can fill this gap. Right, that would be the first business. Maybe take a pullback to go higher. That's if we go higher. Okay. Now there was poor structure underneath us. This structure, we held it with this excess here. That's bullish. This excess low here, and now we're higher low, higher low, higher low. Okay. Right here, if this gets taken out, you got the 200-day moving average down here, 418. Okay. So that's what I'm seeing in the SPY. Where are we now? 426.34. 426.34. So we are at the lows of Friday. At the lows of Friday. So that's pretty important, right? That's pretty weak. But we're at the lows. Okay, is this games where we're going to rip these shorts off, their faces off? I don't know. But we have to see, right? So that market, this market down at the lows of Friday. So that's kind of like a weak open, right? Okay, moving on. Here's the Qs. Okay, the Qs, if you notice, had a downtrend here. It broke it, but then closed underneath it. But here's the big difference in the Qs. Okay, look at the express levels. These are the monthlies. Okay, look what it did. It closed inside August's monthly candle here. Inside August's. SPY couldn't do that. So the Q is definitely stronger. Okay. Also, this was last week's highs and lows. Look, we closed within the previous week's highs and lows. It's a little different. What do we have too? We have that gap. That gap is very, very important right here. We partially filled it. See, this is the gap prior. We partially filled the gap. So this gap's very important, up to 364 in the Qs. Okay, we came up to the 100-day moving average and we found resistance. Right here, boom. Came right up to the 100-day moving average. And I talked about this 355 level, right? Even though we breached it, we wound up closing above it. Okay, we closed at like 358. Now where are we at now? 358.16. So that's a very key level, right? 358.16. Right here, we're at the lows, but this is the low of the prior week. Not last week, the week before that. Okay? And then if we can go back up to this 363 level, start filling that gap, possibly make a move. Okay, because you have the excess built in now. We have to see though. This is all a wait and see. Okay. Real quick, Dow. Dow's in the middle of nowhere. Okay. It's at the year VPOC, and it's under the 200 moving average. So this is very weak. Okay. It's just in the middle of the muddle here. Okay. It's in the middle of the muddle. All right. Just wanted to show you guys that. So the Dow is really like in the middle of nowhere. Okay. So we can move on to the 10-year yield. That's really what's important here. 10-year yield's gapping up. So it made a high of 4.6, came down. Now we're back up. This is going to continue to put heavy weight on stocks, equities. Okay. This is going to continue to put weight on it. All right. So we're talking about the triple-headed monster here. And so we got 10-year yield. We'll look at the VIX. Now that they're all working really against the market right now. Because look, volatility is picking back up. We're above 18 right now. Look, it came all the way down here, and now we're all the way back here. A 16 VIX is a 1% market expected move in the S&P. Okay, so, and the dollar, all working against equities right now. The dollar, look, see how it broke back down on Friday? Below this level, 105.88. Now we're back above it, going towards this resistance level. Okay? So, that's that. We can get right over to the market profile and buying profile. My favorite tool, and look at structure. Okay, we're going to look at structure together. Get my little trusty marker out. All right. Let's bring this up a little bit. Okay. So this profile, okay, you can see here we have excess at the bottom like I talked about in the SPY and the Qs. So that's the excess right here. Okay, so it's thin. Okay, then we have the most traded price still here. I use the RTH is 43.15. Okay, this is the this is the extended hours most traded price. So just consider them together. And then we have not a lot of excess up top. Okay, so you could consider this bullish imbalance. What do I mean by that? A regular profile has a bell-shaped curve. Okay, it looks like this. So we don't have excess at the top. So when I look at that, all I got to do is look to the left. We have a weak high here. That is not big time players in the market, everybody. This is us. People don't just short that. These exact levels, that is not big time players in the market. That is small time players. Those are weak hands in the market. Okay, now what do we have on the other side? We got a weak low. So this is basically breakout points or failure points, support and resistance right now. Okay, and this happens to be particularly a weak low. Okay, and I can also see it being a bear trap. Okay, so you have, this is very, very important. You have a demand zone right here, right? You have Friday's low. You have the 200-day moving average in the futures. You have the overnight low. Okay? So, I could see something happen as a scenario. This can get shorts overexcited, and boom, we take out this weak low. And usually when we take out a weak low, you get a little flush. But let's say we recover, go above the most traded price of the week. Yeah, the most traded price of the week is also here. And then this could fuel that move. Okay, then you can test that weak high up here. So this is looking like a bear trap. But it might not, could go down. But that's what I'm seeing, right? Now let's look at inventory here. overnight. This is what we have long to all, yeah, long to all this short. So this is 50% of the range. This is the midpoint. This is about 75. So we're about 75 short. You got single prints. Okay. So in the overnight, look at this. Look at this volume. Very thin. Very thin. That's not going to take a lot to clean that up and to push back. That's why I'm saying I could see definitely a bear trap there. Okay. You got so many levels here. Like I said, confluence. Okay. Let's look at this again. Friday's low, Friday's high, overnight low. We're within the range. We're at the lows though. Okay, we're at the lows. But there's a lot of stuff here. Okay, a lot of stuff here. All right, so let's look at potential scenarios here. Okay, I'm really liking what I'm seeing right now. Okay, so for a bullish scenario, okay, what you would like to see. Okay, if you were like, oh, I want to get long today. Okay, you got the overnight shorts, 75% net short. Okay, you have demand here. You have the most traded price of the week here. You have the 200-day moving average on futures, and you have the Friday's low, and you have the overnight low. It's just begging to get pushed. So I could see a flush. Okay, you hold this demand zone, even if you break it a little bit. If you start coming up, go back into Friday's range and hold the most traded price of the week, and you can take out these single prints. This is poor structure, and start working your way up into this supply. And again, it is supply, but let's say we get a little resistance here. Work your way up and see if you could take out that weak high and move up to the next supply zone and naked VPOC. Okay, you have liquidity here now. You have shorts from here, that have not been hurt, shorts from here. Okay, I'm sure Friday scared a lot of people. So this is talking about psychology. Okay, let's talk about a bearish scenario. Okay, we could definitely take out this week low, go underneath the most traded price of the week, and if you got to break this demand zone and hold, establish acceptance down here, then boom, you could possibly test this naked VPOC at the end of this demand zone and this excess down here. That's in the cards. Okay, we can make that move up into this supply in a 90-MA daily, fail at this week high, and then roll back over to the most traded price of the week. Okay, that could happen too. Let's move on to the NASDAQ. That is very exciting for me for a reversal. Okay, just to let you know, that's very, very exciting because you have so much confluence there. Now, let's look at the NASDAQ together. Okay, remember I said stronger. Structure stronger. Alright, let's look at the profile. Now the profile got some X ups at the top. That was that move it made on Friday. Then you have multiple distributions. Then you have a low volume node followed by the most traded price of the week. And then you have excess down at the bottom. Okay, that was that buying excess that I talked about. We're above the most traded price of the week, which is 14770. Okay, we're above that. Okay. Now, let's look at where we're at here. Okay, so you have a little mini range, similar, not as exact, but you have pretty much a weak low here, holding the market up. Then you have a high here and a high here, almost like a little bit of a head and shoulders here. That's the move. Here's the gap that it couldn't fill. above us. Okay, let's look at inventory. Inventory. There's your longs to your shorts. Not as much. This is about 70% net short. Okay, you have single prints here. You have weak volume here. All right. Now, you don't have that beautiful setup like you do in the SPY. Like it's to me, it's beautiful. Okay, you don't have that yet. You can still use it. I like the SPY setup. The ES is set up better. Okay, let's look at what we did on Friday. Here's the low. Here's the high. Filled the gap partially, but couldn't fill it all the way. Okay, then you have overnight high, overnight low. Where's price? Price is right here. It's kind of at the bottom third of Friday's session. All right, you're above the most traded price of the week. Now this, like I said, we're kind of at the bottom of a overnight session or RTH session and an overnight session, right? This was the move, and it's kind of being held. There's the 50% line of this move right here. The market's holding it. Okay, so same kind of thing. It's just that I don't have those levels all stacked like I did in the ES. Okay, it's the same kind of stuff, but I don't have those levels stacked. Okay, but this low volume node here, just to give you an example, this represents this support. Okay, that's the beauty of the profile. You can just look at a low volume node and go, oh, okay, that's a support and resistance line. Is it? Yep, right there, right? In volume profile, a low volume node, you could either blow through it, because you would blow through this, right, and take out those longs, or it holds as support. That's how you look at that. Okay, so let's go for a scenario here, and I'm going to wrap it up here. Okay, all right, so I would say the box is around here. This is where you want to do, and you want to stay above the most traded price of the week. So if price comes into here, and these single prints could get cleaned, boom, and you'll see something like this, boom, the flush from these longs into here. Okay, now there is demand down here. We could slip, bounce up, and hold the most traded price of the week. That would give you the fuel to go back up into this supply. Okay, probably get some resistance and try to test Friday's highs in the gap above us. Okay, so this could really fake people out, hit this demand, bounce above this key level and hold it, and then you got the move. Okay, on a bearish side, we also, what we got to do is the market can, like I said, this low volume node here can act as support or get blown through. You come down here, blow these singles, blow past the most traded price of the week, and if you find acceptance down here, then you have demand here, but you could make your move down here and test down here. Okay, that would be the most bearish, right? Also, the market could recover, come up into this supply, the most traded price of the Friday, fail as well, and then we roll back down here. All right, that's what I see. I really like the ES setup. SPY setup, really nice for a bear trap, right? But I have to see the bear. It doesn't mean that it is definitely going to happen. That's why there's scenarios, right? There could be a very swell sell-off, but you just have to see. You really just have to see. That will do it for me. Subscribe, set an alert if you haven't already. Again, give me a like if you like what you saw. That helped me out. And you can always follow me on X at Gonzo719. That's about it for me. I had some other analysis on the weekend for sectors. Just real quick, XLK has that excess. It actually filled the gap. Then you talk about healthcare. very weak, but it's at a level of 129. Could potentially get bid up from there. Financials are weak, or broke two previous monthly lows. And then you have XLY, stronger, closed and held previous weekly lows, previous monthly lows, has good buying excess. Good buying excess. It avoided poor structure. That's bullish. Got has to hold 161. Okay, and on weakness could go to 153. Those are the top four sectors that make up the S&P. So you have weak healthcare, could get bid up though. Weak financials, discretionary, could looking for a bid. That's Amazon and Tesla. And XLK is looking to possibly reverse for the year-end rally, but not sure. So they're not all in unison. So that's about it for me. And everybody have a good day.